There's a big cluster of moving averages. So the 50, the 100-day, the 200-day moving average have all now just coalesced into a very tight spot. Yesterday, that rally in bond prices and drop in yields pushed bond prices above all those moving averages. So here's what you need to know before the bell this morning. We've talked about the equal weight index has been underperforming rather dramatically over the last year or so. In fact, the difference between the equal weight index and the S&P, which is the market cap weighted index, has been about 2 to 1 for quite a while now. That's been changing as of late. The equal weight index has really been getting some traction over the last 2 months. And we've talked about seeing this rotation in the markets where money starts to come out of the mega cap, Magnificent Seven stocks, rotating to other areas like REITs and utilities. And we've seen that here recently. And just over the last 2 months, the RSP, the equal weighted index, is still lagging the S&P 500, but that gap is starting to close a bit. And we've had a very strong run in equal weighted indexes, with equal weight breaking out to all-time highs. And again, yesterday, making an all-time high again yesterday. So we are starting to see that rally broaden out here a bit. The number of stocks that are above their 200-day moving average has improved markedly. So the breadth of the overall S&P has improved. And again, this equal weight index has been doing well here. Again, moving very high, and we've seen this movement into that. Mid caps have also been doing just as well. When we take a look at the mid cap index, it's been actually pacing. It's actually outpacing the equal weighted index right now. It is still lagging the S&P 500 on a year-to-date basis, but it too has been making a all-time high on the mid cap index. Now, outside of those two, most every other index is still lagging pretty dramatically. In fact, small caps are the biggest laggard still to date. In fact, since 2020, it's 2022 at the peak of the market, it's still running a negative return since 2022. Small caps have yet to really kind of break out here. And again, if we take a look back over the last couple of years, small caps have just really kind of continued to lag. So it's been really mega cap, market cap weighted stocks, followed by mid caps, followed by equal weight indexes. Everything else is pretty much still lagging, particularly in the emerging markets and international space. Those areas lagging as well. The one thing that's kind of gotten our attention here over the last couple of days, though, is bonds, because bonds have actually been doing picking up a little bit nicely in price here. Yields have been coming down a bit, and yields have been picking up here. And what's interesting with bonds in particular is that there's a big cluster of moving averages. So the 50, the 100-day, the 200-day moving average have all now just coalesced into a very tight spot. Yesterday, that rally in bond prices and drop in yields pushed bond prices above all those moving averages. So you're now at the junction where we're going to start having quite a few moving averages crossing positive. So you're going to start getting bullish crosses of these moving averages above other moving averages, but also the price has now cleared that resistance level of that cluster of support. So again, if bond prices can hold here and then begin to build support above these moving averages, that's going to become a much more kind of bullish setup for bond prices here in the near term. And here's what's also interesting from this is that we've got a very nice consolidation pennant that's been going on. So again, if bond prices can move up a bit here over the course of the next week or 2 or 3, we're going to get a breakout of this consolidation, which will also support bonds for higher prices. So again, kind of a bullish setup occurring here. You're on a MACD buy signal as well. You're not completely overbought yet. So again, kind of a bit of a bullish short-term setup here. Again, I think bonds have a bit more work to do because of what's going on with the Fed and temporary inflation. But the setup for bonds is starting to look a lot better as we start to move further and later into this year. Okay, that's what you need to know before the bell this morning.